welcome to your daily business update. It's Monday, May 18th, 2026, and we are coming to you live with a comprehensive breakdown of the major economic, corporate, and financial stories shaping Nigeria and the African continent and also the global market. From major industrial funding injections to shifting macroeconomics reality, here are your afternoon business brief. And to start with, the Bank of Industry has officially finalized plans to deploy a fresh $200 million sovereign guaranteed thematic financing facility secured from the African Development Bank. Dr. Olasupo Olusi, the managing director of BOI, confirmed that the capital injection will provide vital long-term financing to boost local manufacturing capacity, supporting small and medium enterprises, and fund critical infrastructure, agro-processing, and green industrialization projects across Nigeria. And now over to the currency flow. The Nigerian Naira started the week trading with a slight fluctuation, hovering around 1,371 Naira per dollar at the official Nigerian foreign exchange markets. In the parallel market, the currency exchange at approximately 1,395 Naira, that's for buying, and 1,405 Naira to selling. Analysts note that while persistent demand from manufacturers and importers continue to exert pressure, sustained interventions and improved dollar liquidity from the Central Bank of Nigeria have successfully kept the official parallel market premium relatively narrow. And in a strategic move to protect public spend against severe economic pressures, the Federal Executive Council has approved stringent new guidelines through the Bureau of Public Procurement. Under the newly instituted policy, all government lines items involving contract variations, fluctuation claims, and project scope changes must now strictly secure a formal BPP certificate of no objection before any funds can be authorized. The framework is designed to eliminate artificially inflated procurement costs as price pressures continue to squeeze public and private budgets alike. Also moving on, data compiled by the National Bureau of Statistics revealed a challenging paradox for West African trade. While Nigeria's total trade export value surged significantly over the last year, the actual contribution of manufactured goods has stagnated at just under 3%. Industry experts argue that despite the open trade doors promised by the African Continental Free Trade Area, local manufacturers across the region are still heavily constrained by weak financing structures, high energy tariffs, and inadequate integration into continental supply chains. Following a turbulent period of geopolitical tension now affecting critical global oil transit routes like the Strait of Hormuz, global energy disruptions are heavily bleeding into domestic retail markets. In Nigeria, the impact has materialized via a reversal in what was steady disinflationary trade. The National Bureau of Statistics just reported a bomb in headline inflation to 15.69%, driven directly by imported inflation, spiking haulage costs, and local fuel prices creeping past 1,300 Naira per litre in various hubs. And finally, on the Nigerian exchange is reflecting a wave of profits taken as the week opens after hitting historic all-high highs earlier this quarter, where market capitalization comfortably breached the 160 trillion Naira mark. The benchmark on the Nigerian exchange floor and all shares index ticked slightly lower by 0.1% as institutional investors and retail traders cash out on recent windfall gains. Despite the cautious slowdown, the Nigerian exchange remains one of the world standard performers of 2026, maintaining an impressive year year-to-date rally of over 62%, while heavyweights in the industrial and banking sector saw highly active volumes. Trading turnover slowed down broadly across the floor as investors adopt a wait-and-see approach ahead of the central bank's upcoming Monetary Policy Committee meeting. And that concludes our first financial briefing of the day.